You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The trading day doesn't start when the opening bell rings. Pros understand that risk never sleeps, and market-moving events happen around the clock. How can you arm yourself with the information you need to understand what's going on across the pond and how it can impact your portfolio? Welcome to the European Market Brief, your go-to source for information on the fast-moving European derivatives markets. Each episode brings you expert insights into the latest market trends, discussions of cutting-edge trading strategies, breakdowns of exciting new products, and analysis of thought-provoking trading activity. The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Eurostocks, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com. So join us as we shine a spotlight across the pond and explore the cross-border volatility, regulation, and innovation that makes the marketplace so fascinating. It's time to get the European Market Brief.
All right, everybody, that music means it is time for the first European Market Brief of the new year. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which all of you folks were binging last year. Thanks to all of you who made the European Market Brief one of the new additions to the network last year, made it such a hit. Thanks to all of you who engaged, listened, download, streamed, of course, sent in questions. We love all you folks who engage with the show. We have more of you coming up later in the show as well. And if you're new, this is your first time joining us, welcome. Looking forward to another fun year on the European Market Brief. And joining us to kick off a fun new year, talking all things Eurozone. First, we go out to the hallowed ivy-covered halls of Indiana University, where we are joined once again by my partner in all things European crime, none other than Mr. Russell Rhoads, from the Kelley School of Business, even though we know him around these parts as Dr. VSTOXX, Mr. Dr. VSTOXX. Welcome back to the show. Happy New Year to you, sir.
Happy New Year to you as well, Mark. Although have I already seen you? Oh yeah, I bailed out on you.
We were scheduled to speak. You had a real estate. Is that the new digs behind you?
This is the new Illinois home.
The new palatial estate.
Yeah. It's I got the total rec room. What used to be the rec room is now my world headquarters, and there's good chance that I'm going to spend 98% of my time in this room. With a big screen TV and my computer, and I got a mini bar and I got a kegerator. I'm good to go.
It's your volatility man cave. There we go.
This is Russell's midlife crisis. Welcome to 2026.
All right, and then also joining us, making her second appearance. She's a repeat offender. He must have liked her the first time. Miss Sophie Granchi, the head of equity and index sales for Europe, the Middle East, and Africa, a big region over there at Eurex. Sophie, welcome back to the show, and Happy New Year to you as well.
Yeah, Happy New Year. Glad to be back.
All right, and then last but not least, we have a first-timer joining us to kick off the new year. He is Arun Singhal, the global head of index product management for STOXX. Arun, welcome to the European Market Brief and indeed to the network for the first time, sir.
Thank you.
And Arun, as we like to do with all of our first-timers here on the network, give our audience a brief overview of your background in the space as well as what it is you do over there at STOXX.
Excellent. We'll do, Mark. Don't want to bore anybody here, but about 20 years plus in indexing ETFs. I've worked at all the big index providers through mergers, S&P, Dow Jones Indices, FTSE Russell, most recently MSCI. I've been here about 5 years to transform STOXX into a global index provider. through my journey, co-founded an ETF company, Index IQ, which was sold to New York Life. So live and breathe indices, ETFs, data, bringing solutions to markets.
All right. With the team assembled, listeners, we will commence our first continental conversation of 2026.
It's time to catch up with the thought leaders who are shaping the European derivatives markets. It's time to have Continental Conversations.
All right, everybody. Welcome to the Continental Conversations segment, the portion of the show where we dive into a topic or a product or a strategy, explore it in a little bit more detail for you folks over there. And of course, to kick off the new year, we need to start by looking back. I think by just about any metric, it was a pretty wild, and in some cases, very much unprecedented year last year. A lot of things going on in the markets, both at home in the US and abroad in the Eurozone. So Arun, as our first timer, we will start with you, sir. Obviously, a wild year last year. Tariff tantrums kind of kicking off the year, and then we kind of went from there, vol highs, vol lows, a lot of interesting developments on the equity and index landscape. When you look back at last year, the wild year that was 2025, what really resonates to you, sir? What were some of the highlights, the lowlights, and indeed the takeaways in STOXX land from last year, sir?
Yeah, for sure, Mark. Definitely unprecedented year. You start to see pockets of really some things flashing. Let's step back and look at the kind of world. Like, let's look at STOXX World AC. It's an all cap, large mid global index, right? It starts to tell the tale here where the top three sectors in the STOXX World AC, basic materials, financials, technology, hot topics, right? Deglobalization, a lot of energy and industrials, basic materials, commodities, defense. Then you move to financials, a really big story around financials, around rates, financials, banks specifically doing extremely well. And then technology, of course, gets all the headlines and the press. But when we look at some numbers here and we look at the STOXX World AC index I described, basic materials in 2025 put up 22%, financials 17%, and technology 14%. So just for context, that's a very broad global index, developed countries, large mid. But where the story really starts to shape out when you go a little deeper and you dissect Europe and in the US, right? So we look at the STOXX Europe 600 and you look at the STOXX USA 900. So large cap European US indices. And this is where it really starts flashing the unprecedented markets Europe had last year. Within the STOXX Europe 600, financials were 49%, industrials 24%, energy 25%, right? Huge numbers. And when we go deeper into financials, and we'll do that a little bit later in the segment, banks specifically in Europe really were unprecedented last year. When you look into industrials and energy, there's things underneath it that we can point to and talk to. But you compare and contrast it to the USA 900, the STOXX USA 900. 6 of the 11 industries were negative. There wasn't a single negative European industry last year. 6 of 11 of the US industries were negative. And the real highlight, as we all know, is technology coming up at 11%, mega cap story, techs. You look at a broad-based S&P 500 or the STOXX USA 900, it's littered the top 10 with technology. So you start to see a lot when you look under the hood from a global perspective where the headlines are basic materials, energy, financials, tech. You're seeing this divergence between Europe and USA with the sectors and the industries that they're known for, that they've been putting investment and resources into. So a lot more there, but you're starting to see this divergence very clearly off the numbers.
I'm confused, Arun. Are you saying there's more to invest in than 7 to 10 technology names? That's heresy, sir. How dare you suggest such things? We're only allowed to invest in 7 to 10 technology names here.
That's all we know. That's all we know these days. Right?
But it is fascinating too. I know this is the new world we all live in, but it is still fascinating to hear Europe and defense in the same sentence, and yet that is very much a big play there. I have a feeling we're going to come back to that in a little bit. But before we get there, Sophie, we haven't talked with you since June of last year. Nothing going on in the markets since June of last year, so we haven't missed out at all. So nigh on 6 months since you joined us, Sophie, so a lot to catch up on. But as we look back on the mad year that was last year, same question for you, Sophie. What really stands out and resonates to you as you look back on all the highs and lows and madness of 2025, man?
Well, I think what is interesting last year is obviously, we've seen some of the American investing in European indices, and that was very clear at the beginning of the year, and it kept on. But I think what we noticed as well is investors have been looking at playing much more thematic rather than global indices. And obviously the global indices are always, liquid and, the most played, but clearly there's some needs for investors to look at specific indices. And so we've seen obviously, similar to what Arun was saying on the options and futures, it's obviously driven by liquidity, but the financial sector, the STOXX 50 banks, is the most liquid sectors and the most active sector by far. It represents about 86% of the volumes of all the sectors that we've got. And you have to know that we've got obviously the STOXX 50 sectors, but we have as well STOXX 600 sectors. And aside from the STOXX 50 banks, then the most liquid sectors and the most traded sectors were mostly on the STOXX 600 Europe sectors. And we've seen like oil and gas, util, basic resources, autos, and real estate were the most popular in 2025. In total, just to give you some numbers, over 100 million of options and futures traded in sectors indices in 2025.
So pretty active year. And Mr. Rhoads, we had a chance to chat with you towards the end of the year on the European market brief, but now the year is officially in the record books. And more importantly, all of your real estate shenanigans is behind you. So now you have a little bit more time, a little bit more energy to focus on the markets. As you look back on the mad year that was 2025, could be from a VSTOXX versus VIX lens, could be from a broad macro perspective. What really stands out and resonates to you, sir?
Well, typically VSTOXX, I think the number's like 75% or so, but VSTOXX typically closes a premium relative to VIX. That was really not the case in 2025, and a lot of it just has to do with I think the U.S. was a source of a lot of the volatility around the world this past year, but also we're still in, and I know that there's one of the questions relates to this, and I'm doing a little work on it right now. We are, in the U.S., we're still in a rate cutting cycle. I believe that the ECB is on hold right now, so there's some different dynamics there. Without getting overly political. Let's just say that there's probably more uncertainty with respect to the leadership in the U.S.'s upcoming actions than some of the European leaders' actions. So the result, I think, has been, elevated VIX relative to VSTOXX, what we've seen over a couple of decades. Was not what held up last year. Both of them are back in line with each other going into 2026, which I find kind of interesting. I would expect, I would just expect a continuation of, higher volatility expectations and higher volatility in the U.S. versus Europe, but that's not really what's being priced in at the moment.
Obviously, when we look at, the term structure here in the U.S., we're going to see a little bit of a blip around the midterms. Are we seeing any similar shapes or setups in the VSTOXX term structure, sir?
I wasn't looking farther out, but
I threw you a curveball. You can come back.
If I talk really slowly, I'll have the curve up in front of me.
You're in the volatility man cave. I thought you had all data at your disposal.
You know what? No. I'm not seeing. I don't, and I don't know. I know. Speaking with the folks at Eurex, and they would know better than I would. A year or two ago, we were anticipating a French election that seemed to cause a bit of a bump in the curve, but I'm not seeing a bump in the curve right now or any time frame that's being specifically looked at with respect to VSTOXX. I do think with VIX, there's one of the near-term contracts looks like it's a little bit of a pop, and I don't know if that's yeah, I mean, we pop right up to 20 by April on VIX, and VSTOXX is stays, much closer to 19. So VSTOXX is not nearly as braced as VIX is for some sort of volatility event, at least going into the first quarter.
That's kind of what I expected. It's very much a domestic political narrative here, but wanted to see if it was spilling over into the Eurozone. Speaking of spilling over, we are now spilling over into the year that is 2026. Let's look ahead a little bit, shall we? That's what everyone tuning in is listening for, some ideas, things to keep an eye on in hopefully the less insane year that is 2026, but we shall see. Arun, we will start with you, sir. We were just talking earlier about some of the different sector performances of stocks. As I mentioned, one of the ones that kind of perked my ears up, probably a lot of the listeners as well, is defense. It is still kind of strange to see so much talking about defense in Europe in the same sentences, but then again, it's been one of the best performing sectors for the past few years as all of Europe adjusts to the new normal here post-Ukraine invasion. Of course, that said, there is the potential maybe this year for a bit of a détente in the Ukraine conflict. So going forward, looking at it through the lens of stocks, Arun, what should some folks be keeping an eye on, in particular that key defense sector, sir?
Yeah, Mark, you kind of nailed a couple key points here. Look, at STOXX, we don't provide investment advice, or we're not political analysts, but it's fair to say that the nationalistic deglobalization is here to stay in the short to medium term. Obviously, we see the saber rattling happening at the political stages globally. I think everyone's looking at, internal spending needs. I like to kind of look at the data and the numbers. That's where we kind of focus. Defense, we know, has had a record year, European defense in 2025. Here at STOXX, we made a large focus and kind of leaning into that segment. We had a record amount of products launched around a couple different cuts of how you can capture European defense. So just some numbers here. We have 3 leading indices: STOXX Europe targeted defense, STOXX Europe a total market defense with a capping on it, just to have some more diversification, and then the Europe total market defense and cybersecurity. The 1-year returns I have through November here, we're talking 97%, 81%, and 74%. But if you look at the 1 month leading into November, December, you're starting to see a little bit of reversal of that. This is unprecedented returns in a micro sector like this, like defense. So I think when you roll it up into industrials and you look at industrials and what's happening there at the nationalistic stage, specifically in Europe, 24% defense is the shining star within there. I think the other one I want to highlight in parallel that we're seeing some interesting things is banks. I know, Sophie, you highlighted it's one of the most traded vehicles from Eurex, the Eurex 600 banks. It returned 76% last year. And I kind of dug into a little bit. I'm like, oh my God, 76% banks. You look at all of the European developed market countries, and if you add up all of their GDP, you get close to the US. But when you look at something like Europe banks, the diversification is very, very nice to see. Within European banks index, the UK is 27%, Spain 18%, Italy 15%, and so on. So you're starting to see a very nice diversification play of mega cap banks in these leading European countries. A little bit of a tangent there on you, Mark. I think there's a play here with defense specifically. We saw the latest headlines right over the break. Right, we are in a different global environment. I think we'll continue to see countries and nations investing in them. I think Europe, I don't have the stats in front of me, but Germany specifically and other European countries have committed to significant investment into defense and other industrial industries. So the numbers are there. We'll see a little bit of reversal from unprecedented highs, but to kind of round out the answer, it's here to stay in the short and medium term. The energy focus and investment into these areas.
Financial 76%. That is absolutely wild, Arun. So again, you're telling me you can make significant returns without the two magical letters of AI. Again, this is heresy, Arun.
This is European banks, though, right? The headlines are all AI or kind of the warmongering kind of defense, and it's real. But the European bank story, you got to look under the hood at the diversification of the mega banks you're receiving there.
There you go, listeners. That's why you tune in to the European Market Brief to kick off 2026. For some nuggets like that, everyone's looking at AI and tech, and everyone's thinking defense, but sniff under the hood a little bit. Financials in the Eurozone, an interesting area to keep an eye on in 2026. Sophie, same question for you as we're looking ahead to 2026. We're seeing so much action in a broad variety of sectors, not just the AI that is popular here. Obviously, defense still hot, still an interesting area for Eurozone, at least for the near term. And then, of course, financials sneaking in there, maybe under the radar with some very impressive returns. As you're looking at these sectors, if you have any thoughts on them, and also from your perspective in the Eurex hot seat, what sort of use cases are you seeing in these? Are you seeing a lot of speculative positioning, hedging? What are you seeing on the Eurex side?
The futures are so liquid that, you can do a lot of things with it. And you can play directionally, one sector futures versus another sector futures. You can as well do some specific hedging. As I said, we have 92 instruments on the sectors at Eurex, so you can really, find the right one, for hedging. You can hedge, your cash or ETF exposure with put on a similar sector, for example. But I think one interesting theme as well is dispersion, and you can pick, some basket of single constituents and sell and buy, for example, call on those single constituent and sell an options on the sector indices on the back of it. And this is typically something that you can do on the financial, pick the top 5 names or some names that you feel relevant, whether you want to do it on the buy side or on the sell side, and you have the advantage as well when you trade at Eurex and you trade within the equity group, the clients are benefiting from cross margining within all the equity group, and so they can reduce the collateral posted at Eurex, which is specifically beneficial on those type of strategies.
Now, Mr. Rhoads, you've had some time to crunch the numbers since we chatted last, sir. As you look ahead into the volatility mists in the Eurozone for 2026, sir, what really stands out to you? What are you keeping an eye on as the year kicks off, sir?
Well, Arun beat me to the banks, man. I've always, I've always been very aware of that the Europe Banks Index is an extremely liquid futures contract. I mean, if I were charged with creating a CTA where I'm trading European index futures, I mean, the banks would definitely be in my toolbox. And the banks relative to the STOXX 50. So I was just taking a look at the relative performance between the two. The banks index has beaten the STOXX 50 the last 4 years in a row. And the banks are up about 260% versus 63% for the STOXX 50. The trader in me is, when's the 50 going to catch up with the banks, and should I put a spread trade on there? So that's the main thing that's popping out at me, is just how much farther do the banks have to go? And, the U.S. banks had a pretty good year as well, not 76% or the upper 70%, but also quietly did quite well. Based on the interest rate environment. I do wonder, with the ECB on hold, if that is a factor that might come into play that might favor some other sectors in 2026 versus the banks.
Let's go around the horn one final time, get everyone's thoughts on some things, some final takeaways, some final things to keep an eye on for 2026 before we sneak in some of you folks when we answer the red phone. Arun is our guest. we will start with you. First off, I'm kind of curious. It must be fun as a product guy. You don't get a lot of years like last year where you have so many different irons in the fire, so many things going on. Usually it's maybe one sector that's delivering everything like it has been in the US forever, where it's all tech all the time. The Eurozone, a much more diversified and interesting story. So I'm sure from a product perspective, it makes it a little bit more fun. But as you're looking ahead to 2026, anything else you think folks should be keeping an eye on, sir, for the new year?
Yeah, just to highlight, yeah, last year was a fun year, right? STOXX being a global index provider is very, very focused and leading provider in Europe. So yeah, Mark, it was a fun year. Everything was kind of clicking. But now looking into this year, one area we haven't touched on a bunch, because we touched on a lot of things. I don't want to be repetitive in terms of financials, banks, industrials, AI. One thing is within basic resources, basic materials, seeing a ton of the commodities spill off into equities. So you look at silver mining, junior mining, lithium. These are all equities that focus in this area. And they've just been through the roof. And really, we're seeing more of an acceleration in the second half of last year. So again, so some numbers here, right? Our junior gold miners index, the STOXX Global Junior Gold Miners Index, put up 125% in 2025. These are things kind of that go under the radar. So what we tend to do here, just kind of for the broader audience, is we really like to look at the kind of trajectory of return. So we map every one of our sectors, industries, and thematic indices on a 1-year return and a 1-month return. And we constantly cycle through looking at the velocity of this. And kind of month over month, we're seeing silver mining, junior gold mining, lithium miners, copper miners, all flashing. So it kind of goes back to the broader story of what's going on globally, but definitely seeing a lot in basic materials, basic resources go down a little bit further into these kind of thematic indices as well. But I know Eurex and STOXX have partnered on a vehicle around basic resources, which does well, which captures that at a much broader level.
Copper, a big story even today as we're kicking off the show. A lot of interesting areas and sectors to keep an eye on in the Eurozone heading into 2026. Sophie, same question for you as you look ahead to hopefully a little bit less mad year, even though it's starting off with a bang here in 2026. What are some other takeaways, maybe some areas folks should keep an eye on in 2026? And also, you know, it's just a couple of us talking here on the show. If you want to give our listeners any hints, any insights into what you have up your sleeve over there at Eurex on the product side for the coming year, have at it, madam.
Well, you know, we always try to listen to client demand, and obviously we've been quite reactive with the defense sectors, and we created some futures on STOXX Europe Defense Total Market Cap Index in May. Just to respond, you know, to obviously the demand from the client on defensive name and the surge of names like Rheinmetall, for example. So that's definitely something that we're looking at, and we remain flexible. So it could be very much that this year another sector would, you know, like surge, and you know we would need the creation of another index. So I'm saying, you know, we're always looking at expanding the list of sectors when it makes sense. On the other end, you know, like if we're looking a little bit about consolidation, I told you, you know, we have about 92 contracts. And a lot of sectors, some that trade less than others. And we are at the moment exploring a shift to industry futures and options that would streamline today's many sector contract to a more focused set based on 11 industries indices in order to reinvigorate the segment. So that would also align with the ETF trading habits, which are based on such higher level indices.
All right, Mr. Rhoads, the last word is yours. Any other secret things folks should be keeping an eye on in 2026 before we answer the red phone for the first time in the new year, sir?
No, but I'm very excited with about what Sophie just said. You know, from the U.S. futures program that I'm on with you periodically, that I get very excited about the sector futures that we have here. And I've been trading the sector ETFs in the US against each other for years. But I do believe that it's an easier thing to do when you get the liquidity in the futures markets versus the ETF market. So I'm very excited to hear that. It's like I don't have enough to work on, but relative sector performance in Europe, I think there'll be lots of cool opportunities there. You know how I feel about that industry stuff.
You're not a one-trick pony, sir. But speaking of having things to work on, I think our listeners have a little bit of homework for you. It is time to answer the red phone.
What's on your mind as you're navigating the wild world of European derivatives? Let's find out as we answer the red phone.
All right, everyone. Welcome to the red phone segment, the portion of the show where you folks take the reins. We tackle all of your various listener questions and comments. Thanks again to all of you who take the time to engage with the show. We love you all. Whenever we launch a new show, we always wonder how it's going to engage with the audience. Pleased to see so many folks taking the time to engage with the show. Let's kick it off. Mr. Rhoads, we're going back to you for this one. This comes from Evan. He actually addresses it to you. He says, for Mr. Dr. VSTOXX. So there you go. He knows exactly where he's sending his question. He says, with the diverging monetary policies between the ECB and the Fed in late 2025, how should we be playing the relative value trade in the European versus US vol as we enter January? So kind of a long way around to asking the question I think a lot of people have these days, which is VSTOXX versus VIX. How should we be lining up, sir?
That's a tough one. And you know, you put me on the spot because they're kind of in line with each other right now. And you know, so for a low conviction, if I had to do something, I actually think I would take a look at short VIX and long VSTOXX. And the reason being is I think any surprise out of the US there are a lot of people that are already braced for it. And I do know that we have periodically gotten volatility events out of the US that spread globally, and you're typically better off owning VSTOXX. It just tends to react more to the upside than VIX when we get these volatility events. So since they're both in line with each other, that's how I would lean on this one. One thing that I would definitely maybe take into consideration is the spread between Jan and Feb is much narrower in VSTOXX than it is in VIX right now. So maybe, you know, a calendar spread where you're short February VSTOXX, you own January VSTOXX, but then maybe you're short US January VIX and long US February VIX, because there's a 2-point spread in the US market and there's a $1.50 spread in the European market. So, you know, something I've been looking more and more at calendar spread, you know, like almost like a box spread calendar spread.
Yeah, it's kind of like a international vol box spread, if you will. Maybe we should coin that. Maybe we should have a whole show just about that. What do you think? I think folks would tune in for that.
Do something like that. But I and just as a quick refresher, I take the 10:30 Central Time price for VSTOXX and VIX, and that's my daily closing price of comparing the two. That's you got to have something where both are open, both are liquid, and that's just, you know, that's arbitrary, and that's the Russell methodology. But that's typically the time that I'm looking at. So right now would be the time that I'd be looking at. We're about 10 minutes past that as we record.
I can see the title now: International Calendar Battle, VIX versus VSTOXX. Who will win? Folks would devour that, sir. I'm just putting that out there. Let's keep rolling, see what else the folks have for us. Looks like you're getting into the realm of the sector futures, which is very much germane to us here on the shows. Next one comes from, not from BB-8 of Star Wars fame, but BB-82. He wants to know, I'm seeing a lot of volume in the European bank sector futures lately. Yeah, maybe you've been listening to the show. Is this a, quote, higher for longer rate play, or are we seeing institutional rotation out of the U.S. and into European financials? Well, this sounds like it could be a good one for both Sophie and for Arun. Maybe Sophie, we'll start with you as our product guru here on the show. He mentions the volume we're seeing in the futures. You obviously deal with a lot of the institutions on a day-to-day basis as well. He wants to know, are you seeing rotation out of the U.S. and into European financials, maybe as an attempt to chase some of that performance that Arun was talking about earlier? Then Arun, if you want to jump in after, have at it.
Well, it's true that, we've seen, and as I said, earlier in the year, definitely some interest from US investors into Europe, and especially in the financials. And you can see that the rally is proving that it's been a good trade. I think that right now it's a little bit more cyclical, and people are always tending to invest in sectors which are underperforming at the beginning of the year. So let's see, if they want to reinvest globally into Europe, or just more specifically into sectors. I haven't noticed, specifically some demand recently from US into the financial, but there would be probably some catch up to do if the rally keeps going on.
Arun, our listeners are obviously noticing that that outperformance you mentioned in the European financials. Are you seeing any perhaps institutional interest or rotation out of the US and into the Eurozone, perhaps to chase that performance, sir?
Yeah, it's hard to pinpoint when we say rotation. So just kind of go through the numbers again. The STOXX USA 900 financials last year put up 5%. Europe financials were at about 50%. If you go deeper from financials industry into the subsector of banks, Europe was at 76%. Now you look at the US, and basically it also had 5% in financial. I'm just pulling this up. Give me a minute here. Banks have done well at 16% in the US. So I don't know if it's more of a rotation out of the US as it is a deglobalization, higher for longer rates. And then, like I mentioned earlier, when you look at the STOXX Europe 600 banks, which Eurex has a vehicle on, very, very highly traded. I believe, Sophie, correct me if I'm wrong, it's one of the most traded vehicles in Eurex's book. If you look within the composite of that index, you see some really interesting things. I mentioned already, I won't harp on it, but it's very well diversified. So you look at the STOXX 600 Europe banks, you're getting the mega caps from each European country's banking system. So to answer the question, I personally, it's a personal feeling, I don't think it's a rotation out of the US as much as it is higher for longer, but more so what we're seeing at the global macro deglobalization level. You're going to start seeing global mega banks do really well in this environment. And I think something like the European mega banks have been overlooked for several years, and they're back on the scene now in 2025.
All right, let's keep the stocks party going with this question here from Adam. Man, listeners coming at all sectors here on the show this week. Adam Times wants to know, he says, hello, this question is for the European Market Brief program. Well, you passed the first test, Adam. You sent it to the right show. He says, I've been looking at adding stocks to my international equities mix, although I have also noted a bit of a longer-term divergence between stocks and SPX. Yes, you have picked up on the thread that we've been talking about throughout the show. There's some different sectors at play in the Eurozone versus here in the US. He goes on to write, is this divergence between stocks and the S&P 500 just cyclical or evidence of a shift in global equity performance? Arun, this is obviously something we were just talking about earlier in the episode, different sectors really lighting it up in the Eurozone versus here in the US. Adam wants to know, do you think this is just cyclical or evidence of potentially a shift in how equities perform internationally?
It's a great question. It's a big question. Again, we don't have a crystal ball. None of us do, right? We're not here to provide investment performance. But what the data is telling us is that European markets' correlation to US markets is coming down, right? When you look at the valuations and the correlations of European markets to US markets and other markets, last year showed us a clear diversification play. If you look back over the last 5 to 10 years, European markets didn't have the valuations or correlations to other markets that made it as attractive of an investment play. right? You could point to several factors that probably drove this, right? Geopolitically, right? We all know about, they all hit the headlines, but I really want to kind of try to answer the question. This divergence has hit the main stage, and kind of from a stocks perspective, that divergence, the punchline for us is that European investing has to come into a total asset allocation investment toolkit now. Because you look at the underlying data and there's significant divergence in the characteristics of European equities, European sectors from US sectors today. And that provides an investment opportunity.
All right, so we have to get out of here talking a little bit more vol. This has to be the handle of the week, maybe of all the questions we get on all the shows. I don't know. It's going to be hard to beat Max Alpha. I like that. Max Alpha wants to know. We've seen the VIX VSTOXX spread widen significantly in the last quarter of 2025. Does history tell us this is a, quote, Europe-specific risk premium, or is this usually a leading indicator for a global vol spike? Well, maybe we'll start with his premise first, Mr. Rhoads. Do you agree with his premise that we have seen it widen out significantly, as he puts it, towards the end of 2025? And then B, he wants to know what he thinks this portends for European vol in the new year, sir.
You got to love when somebody doesn't directly answer a question, but I promise I'm directly answering this question. One of the things that we find with implied volatility, especially index implied volatility, is that there is a reactionary and an anticipatory component to it. And, much like, you could go to the Fama French factors for small cap versus large cap, et cetera. And I think there are times that the anticipation takes over. I think anticipation or worry is another way, is one of the reasons that VIX was at a premium more often than not relative to VSTOXX last year. And that's something that we generally don't experience. In that case, I think it was a U.S. specific anticipatory factor that kept us at a premium. I think regardless of what your politics are, there's a lot of uncertainty in North America versus Europe, and that's really how it showed up. So I would attribute it to the anticipatory factor being higher for the U.S. than Europe, and not necessarily globally. Now, VIX does react. It does anticipate global events a little bit differently than VSTOXX does. And that's where some of the opportunities do pop up and vice versa. I've used this example a million times, but I think it's a great one. When we were leading up to the Brexit referendum, VSTOXX was extremely elevated and VIX was not. And if we had not I feel like if Brexit had not passed, VIX wouldn't have done anything and VSTOXX would have come right back down. Because it didn't pass, or because it did pass, I guess I said that backwards, but because the referendum ended up passing, which was the surprise, VIX caught up to VSTOXX, and VSTOXX didn't move that much. So it's not necessarily that the VIX VSTOXX relationship is indicating that we need to be worried about global volatility. I think it's much more specific when you're thinking about the anticipatory part as to what's going to happen in the two specific markets. And there's just more concern with the US market than the European market.
All right, that music means we've come to the end of our first sojourn into the Eurozone for 2026. Don't worry, a lot more on the docket for the new year as it unfolds. And of course, keep those questions coming. We love how you folks are obviously very engaged with the show. We appreciate all of you take the time to reach out and ask such very pertinent and timely questions. But before we go, let's go around the horn one final time. Arun, as our guest, we will start with you. First off, you did an able job as a first-timer, sir, so well done. And then B, if folks want to learn more about all this cool stuff we're talking about, financials, defense, all the different sectors, all the things going on with stocks, where should they go? What should they do?
First and foremost, STOXX.com has all of our contact information. You know where to find me personally. Everyone here on the call, I think, is close enough to make sure we can get to anybody needed for any questions you may have.
There you go. Check them out over there at STOXX. Seems like a lot of you are doing so and probably will continue to do so into the new year as we keep rolling. Sophie, before we roll out of here, if folks are intrigued by all these different products we're talking about, perhaps want to kick the tires for themselves, where should they go? What should they do?
Well, they should look at Eurex.com. We have like a lot of our products, descriptions, graphs, and obviously they can reach out to me directly, either on LinkedIn, on Bloomberg. We're here to answer any questions.
There you go, Eurex.com, EUREX.com, the wellspring from whence all of this content flows. Listeners, check it out if you are even remotely intrigued by any of these products we're talking about here on the show. And last but not least, Mr. Rhoads, if folks have questions about all things European vol, and clearly they do, where should they go? What should they do, sir?
You can always find me on Twitter and DM me on Twitter. I'm pretty good about answering them there. It's at RUSSELLRHOADS. No E in that final name there. No, that's the best place to find me. Or here. I'm here every week.
That's right. You can always hit them up. Hit them up on Vol Views as well, listeners. That is going to do it, like we said, for this inaugural episode of the European Market Brief. Not going to do it for the network, though. We'll be back later today with yet another awesome pro Q&A session. Today's guest / victim is our good buddy, Mr. Rich Excel, who tackles a lot of different products and sectors, including maybe a little bit of international. So start getting those products and questions in now. Again, if you're not part of the pro, the optionsinsider.com/pro is the place to go to learn more. And then we'll be back again very soon with another episode of the European Market Brief. Stay safe out there, everybody.
The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Eurostocks, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.